Hello you guys, it's just another box again, and yes, today we have another update on the ATOS stock. This stock just won't let go. I have to say, there's so much going on and there's always some news worth reporting. Like today, for example, I will share the news with you in a moment, but first I would love it if you could subscribe to the channel and hit the bell icon. If you don't want to hit the bell, at least subscribe. I'm just 50 subscribers away from my next goal, and it would be super nice to reach that milestone in the next few days. If you think it deserves it, definitely subscribe, like, and comment. Alright, let's dive right into it, the news, and then I will tackle the big question. Should we sell before the reverse split? Well, I will walk you through the few things and explain how I plan to handle it. As always, this is not financial advice, but I will share my personal approach. First, let's look at the news. ATOS has secured a 612 million contract from the UK secret bank. They are quite a bunch of worth, and this is definitely great news, and ATOS order books are filling up nicely. Things are looking very positive from this perspective. Now, let's address the big question. Should you sell before the reverse split? I get this question a lot in the comments, and there's no one size fits all answers. It really depends on the stock price. The reverse split is happening at a ratio of 10,000 to 1. I think I did upload a video about that. You can check that out later if you want and make sure that you know what's happening. After a reverse split, the current price is around 0.0046, which would translate to 46 euros in total. ATOS had also launched a share buyback program where they will buy back shares up to a value of 50 euros. That means there's not much room left between 46 and 50. Essentially, ATOS is valuing its own stock at around 50 euros post reverse split, with roughly 200 billion shares outstanding at the current price. This would imply a market capitalization of $1 billion or euros. ATOS seems to be saying we will buy back shares up to the market cap of 1 billion. Anything above that, and the buyback program won't be active. Personally, I've had some bad experience with reverse splits in the past, but the situations were completely different. Back then, the reverse split was done to increase the number of shares, which led to the stock price plummeting due to delusion and short sales jumping in. With ATOS, the situation is different. The delusion has already happened, and the reverse split is more a cosmetic adjustment. That said, I would still base my decision on the stock price before the reverse split. We have until April 24th, so the price could still move up. If the stock stays around 0.005 or 50 euro post reverse split, I wouldn't sell before the split. ATOS itself seems to value stock at 50 euros, so I don't see much risk of the price dropping after the split. However, if the price rises significantly before the reverse split, say 2 times or 3 times, I will probably sell a large position of my holdings before the split and then see what happens afterwards. If the price drops post split, I could buy it back in. If it keeps rising, I would still have some skin in the game. Of course, this depends on the overall situation, what kind of news comes out, whether there are more contracts or sales, etc. If the price rise is justified by strong new flows, it might be worth holding, but if it's still speculative, it could be risky at all. ATOS has only committed to buying back shares up to 50 euros, so if the stock shoots up to 200 or 300 euros post split, there's a higher chance it could drop. At the current price, though, I would sell before the reverse split. If the price stays around this level, I would hold. If it rises significantly, I will consider selling the portion. My current gains are already above 100%, which is fantastic performance. Normally, I would say it's time to take profit, but I believe there's still more upside here, especially given the geopolitical situations in Europe and ATOS' role in the IT and defense. That said, always remember, pigs get fed, hogs get slaughtered. This is especially true in the stock market. If you've made 100% or more, it might be wise to take some profits, especially if you have invested money you can't afford to lose. I always say only invest what you can't afford to lose, and ATOS is still a high risk investment. Keep that in mind. Lastly, let's talk about short sellers. Currently, 4.19% of the float is sold short by investment firm. After the reverse split, this would translate to 750,000 shares. That's still half of the free float, which could create squeeze if the short sale needs to cover. According to the data, the short position is still active as of March 10th. The short seller must be depth in the red at this point, assuming the data is accurate. So yeah, keep in mind that you have to decide what you're going to do by yourself. And I'm not telling you what to do, it's all your choice. But right now, at this point, I would say just hold on to and see how it goes in the future. That's going to be it for today, you guys. Take care, and until next time.